We've had a lot of I think, trading in the equity markets based on a more positive future. The cyclical reopening trades, all that stuff. You think, just don't be too clever. The future's going to get better. The momentum's that way. Just go with it.
In some cases, yes. And the reason that I say that is because if you look at the flows into sectors, especially like financials and energy, there is some concern right now that the flows have been so strong, so that means that we're set for a pullback. If you just take financials first and look at the fact that the market is always a discounting mechanism and always looking forward, and the things that are a tailwind of financials right now, things like we would expect the yield curve to steepen, we expect net interest income to go up over the course of 2021, the fact that they're allowed to do stock buybacks, the fact that investors have been absolutely thirsty for any type of guidance, and we're getting numbers on loan loss provisions that are some element of guidance throughout the year, there's a decent tailwind behind financials. So just because the flows have been high doesn't mean you have to exit. I think the energy trade is a different story, and that's going to be a little bit more of a temporary boost to profits, a temporary boost to the share prices as the economy reopens, but then it probably dies off again later in the year.
Mike, you want to weigh in on just the notion that, you know, the market does get discount ahead to better times. When do we know that it's fully priced in? You never do. You never do.
Well, first of all, it's not a moment. There's not going to be some day we come in and say, now is the back to normal moment. So over the course of, months and weeks, we're going to have that push-pull between a lot of stuff has run ahead. As Liz said, look, banks don't look all that cheap right now relative to how they've traded over the last 5 years based on the numbers that they're putting up today or this year. So, I think you can have that argument about whether we've built in a lot in terms of banks. And by the way, when you have a mania going on in startup fintech on the presumption that they're going to eat the lunch of the traditional banks, how many dollars are we promising to different companies here in the future in terms of earnings? All that stuff makes sense, but it's a bull market. When earnings estimates in aggregate are going up as they are right now, and when you do have this kind of broad participation in a rally, yeah, it's very difficult to make a call to say now is the moment when it's going to end. Obviously, everyone's got their eyes on all this speculative stuff happening because that has nothing to do with pricing in the reopening. It has to do with the excitement of short-term gains, penny stock volumes raging. All that stuff is happening off to the side of the market's economic discounting process that's ongoing.
Liz, we can't know exactly what's going to happen, but taxes are probably going up, and regulations are going up, and the debt is going up, and Janet Yellen says go bigly or bigly. I think that is a word now, but go bigly or go home. So, I mean, those things seem like clouds on the horizon to most people, unless, we just have free money forever.
Sounds like the makings of a pretty helpful wall of worry to me. Yeah, okay, go ahead, Liz.
I mean, it is a big wall of worry, but I think investors are looking at the hand in front of their face, and the hand in front of their face says we're going to get big fiscal spending, we're going to get support in the economy through these first 6 months of the year, and that overpowers the fear of tax hikes and regulations. I also don't think that what was originally proposed by the Biden campaign back in fall, is not actually going to get through. So some of that stuff that the market got so worried about and got so jittery about, it'll be some sort of watered-down version of that. But that wall of worry isn't something that I think investors are trying to climb until the second half of this year, maybe towards the end of this year.
Shepard Smith here. Thanks for watching CNBC on YouTube.